Hey everyone, my name's Andy. My channel's Finding Value. If you like making money, I would definitely subscribe to the channel, join our community, ride this commodity bull market up with everyone in our community and myself. And what I'm going to talk about here is a real estate update. I'm going to go in and look at some of the things that I think is the foundational base of a commodity bull market. I have not seen a commodity bull market without a real estate boom. So real estate is important. I think we are going to head much higher. And I know people, they're very one-dimensional on YouTube. They look at price and they say, oh, the price is high. It's going to be a bubble. I'm like, well, why don't you look at all the other data? I mean, I get a little bit frustrated, a little bit annoyed at some of the other YouTube channels because they look at like one thing. They're just one-dimensional. It's like, look at all of it. Look at everything. So in this particular presentation, I'm going to look at most of the background information. This will give you, hopefully, a lot more confidence in your holdings of whatever it may be. I'm heavily in oil, uranium, precious metals, copper, nickel, tin. I'm in all that stuff. So real estate is a foundational kind of base that these commodities are going to launch from. That's where inflation, in my opinion, comes from. It's all those commercial banks lending against new homes. So I'm going to look at all that data right here. This is a real estate update. We're going to look at all of it. So again, real estate's the driver. I consider real estate to be the driver of the economy. It allows money into the hands of people as it gets loaned into existence through real estate in a fractional reserve lending system. I like watching housing starts to gauge the health of residential real estate and to see where we're at in the real estate cycle. So let's start off with housing starts. So we've got an updated housing starts, April 16th. It's 1,739,000. It's right up here, and you can see it in real time over here. We are entering an expansion phase of real estate, and what that means is it's going to be inflationary. The last bull market was from here to here in commodities. The other one was from here to here. The bull market for gold was from 70 to 80, so that was also in an expansionary phase. And from about 2000 to 2011, which goes just past it. So it went just past this to 1980 and just past this one to 2011. I think that we are going to enter a large, very large real estate boom, massive boom. We are massively underbuilt by 4 million homes roughly in residential real estate. And I'm going to show you a bunch of data in this presentation to show you where I think it's going to go. So here is the housing permits. These are building permits. These they don't correlate 100% to housing starts, but the permits should lead starts. And the permits are at 1,766,000, which is pretty dang high. It means that we are building more than the average of about 1.4 million, 1.5 million. Now here's the projected housing starts. Someone at work did this. They colored it and said, well, if this is the deficit of homes under we'll call this the line in the sand where it's an equal housing market. As you underbuild, you're at some point going to have to overbuild, where the area under the curve equals each other. This is the area under the curve here. This is the area here. Area under the curve here equals this. And then so on and so forth. This large area under the curve is somehow going to have to be projected forward. And this is kind of what it may look like for an expansion phase of real estate looking forward if this was 2021. So we're going to have to build a whole bunch more new homes to satisfy the demand of new families being created called the millennials, who are all entering home buying years. And we're going to have to build a bunch more new homes. So some of the real estate projections, 2000 to 2007-8, houses went from 116,000 to 205,000 in the city that I'm in, Colorado Springs. It was up 76%. At the beginning of this cycle, the housing was about 385,000. And by the end of it, we're guessing maybe 900,000, something like that. A lot depends on inflation rates. You got to keep that in mind. If it's high inflation, home prices are going to go up even more. And again, these are just projections about homes in the area that I live in, which is in Colorado. It's going to be very different wherever you're at. And maybe it'll be more, maybe it'll be less. I don't know. That's just some projections that we were throwing together. Here's the housing inventory. This is the active listing count in the United States, and it is declining rapidly. We've never been this low in terms of housing inventory, not even close. House prices have to go way up in order to balance this out. And if we're going to build a whole bunch more new homes, we should be seeing lumber prices increase. And look at this, we have a massive breakout. All the way back to 2008, we have a nice big uptrend line, broke to the upside quite violently. Now, everyone thinks, well, I'm going to have to pay more for my house. Maybe they get sticker shock. Oh, I have to pay $30,000 or $40,000 more for this house because lumber prices went up. What if these don't go down? What if they continue to go up? What if the lumber supply problem doesn't get fixed very easily? What if this doubles again? I don't know. A breakout of that size of pattern, that could run quite a bit. I don't know if it's done running. I don't have the answers here. I'm just asking the question. Maybe these people are wrong. Maybe they should say $30,000 more. I'll still take the house because you know what? 2 years from now, maybe it'll be, $200,000 more. I don't know. But I know it's getting more expensive. Here's the monthly supply of houses in the United States, looking at it from a long-term perspective. When I said the short-term one that was here, this guy here is off the charts. It's way down here. It's never been this low. We need home prices to go up even more so we build more new homes. We are screwed. We don't have enough homes, not even close. Here's the real monthly mortgage payment price index. Really, we're not really much above average. It's not like it's getting too much more expensive. This is the Case-Shiller Home Price Index adjusted for inflation and mortgage rates. So we were much more expensive over here. And obviously we had some nice, good lows. This would have been a perfect time to pick up a house for somebody. And we're still around average. It's not too bad for all of USA. Here's the per capita personal income. That's moving up quite rapidly. That looks pretty good. Here's the average sale price of houses sold for the United States. You can see that this is also moving up quite good. Now, this is the real residential property prices for United States. This is adjusted. So this is the real residential property prices. So we're still not above its previous high here for real residential property prices. That's adjusted for basically taking personal income and adjusting the average sales price, the personal income, and then giving a real residential property price. So it's still below the highs of the peaks beforehand. But we're in a much worse situation now in terms of supply and demand than any time in history. This should be off the charts. So my question is, what do you think? Let me know what you think in the comment section on where prices are headed. I think that we're going to go much, much higher. Inflation driven and also supply demand driven from both of those fronts. Inventory is not there to support lower prices, in my opinion. Bidding wars will continue and new home prices will continue to climb higher. And if you're interested in finding where I got this data, you can go to this realestatedecoded.com. That's where I got a lot of these charts. I'll put that in the description link. But there's no homes to buy. There's no homes to buy. They have to get less expensive. They have to get more expensive, less affordable. Sorry. You're going to have more and more people bidding off over less and less homes, and that's exactly what we're seeing. So this will continue until we build more homes or until the affordability of the top 10% of people bidding on these homes get priced out. And I don't know where that level is. It's probably much higher than where it is today. Houses here, they go on the market and they go for a lot more than asking. Maybe 100, 150,000 over in all cash offers. So we're nowhere near a top. A top would look like something like inventory is increasing. We would be having days on the market go way up. We would have home prices stabilizing and going back down. Right now, we're on a launch pad. This is like pent-up demand that can't buy anything. So what we're seeing is days on the market go way down. Inventories approaching zero. Days in the market are approaching zero. It's in minutes and hours now. and people are bidding whatever they can just to get the house. So I think this will continue until we build more new homes, and it will continue for a while. That's my guess. I don't think we can solve this overnight. So with the backdrop of this, with housing and real estate being strong like it is, I think that commodity prices are going to be very strong going forward. Short term, we could pull back quite a bit. Long term, very strong. So if you guys like this presentation, give me a thumbs up. Leave comments below. I'd like to hear your guys' opinion on what you guys think. And thank you for listening. This is Finding Value.